what we're going to look at in this lesson is how to calculate straight line depreciation. Now, straight line depreciation means that you depreciate the asset by the same value each year. So let's look at an example. Let's say that you bought some machinery at a cost of $200,000. And this machinery has an estimated useful life of 5 years. And at the end of the 5 years, you'll have a salvage value or a resale value. And this salvage or resale value is going to be $50,000. What we want to do is calculate the annual depreciation and the net book value for each of the 5 years. The first step is to deduct the salvage value from the actual cost. So our cost was 200,000 and our salvage value is 50,000. So this gives us a value of 150,000. And this 150,000 is the value that the depreciation is going to be calculated on. The second step is to divide the amount to be depreciated by the number of years. So the 150,000 divided by 5 years, because there's an estimated life of 5 years, and that is going to give us 30,000. Now this 30,000 is the annual depreciation, and the annual depreciation does not change each year when you're using straight line depreciation. The third step is to calculate the net book value, the NBV, for each year. So we start with the cost, and the cost is 200,000, and we've already calculated our annual depreciation. So we will deduct our annual depreciation from our cost, and this is going to give us then 170,000, and this is our net book value at the end of year 1. And our net book value at the end of year 1 becomes our opening value at the beginning of year 2. So we would then depreciate again by the 30,000, and at the end of year 2 we'd have a net book value of 140,000, and this net book value at the end of the year 2 becomes the opening value at the end of year 3, and we would then again deduct our depreciation of 30,000, giving us a net book value at the end of year 3 of 110,000. In year 4 we would then deduct depreciation again of 30,000, giving us a net book value at the end of year 4 of 80,000. And then in year 5 we would depreciate another 30,000, giving us a net book value at the end of year 5 of 50,000. Now this 50,000 is the residual value, and when you depreciate you always need to end with the residual value. And if we just hop back a little bit, we remember that our cost minus our salvage gives us the depreciation amount, and our salvage is 50, which is our net book value at the end of the year. Now what does this mean for depreciation? Well, every year the 30,000 depreciation goes into your profit and loss account, but you will also have an accumulated depreciation account. So at the end of year 1, your accumulated depreciation, and this is the total amount of depreciation on the asset over all periods. So at the end of year 1, it's going to be 30,000. At the end of year 2, it's going to be 60,000, because accumulated depreciation is your total depreciation for the asset over all periods. So at the end of year 3, it's 90,000, at the end of year 4 it's 120,000, and at the end of year 5 it's 150,000. And if we hop back here again, we can see this is the 150,000 now matches our accumulated depreciation value, and that is extremely important. So that's how you calculate straight line depreciation. My name is Paula Guilfoyle, and I am from mybookkeepingcourses.com, so I hope that you will pop over and visit my website, and please subscribe and also give this video a thumbs up if you found it any way useful.